And we begin this morning's show there. Brian Sozzi, a very interesting quarter out of Procter Gamble. I know you talked to the company a little bit earlier today, and we're going to play that tape for our viewers in the next hour. But really flagging right at the end of that press release in a number of categories, they are planning price increases in September. A few interesting angles here, not the least of which is that they are giving a 2-quarter lead time, basically, on when prices are going up, and saying that they cannot manage and they do not see these, pricing pressures or these cost pressures as anything like transitory.
Well, Myles, that gives you time to stock your cupboards with lower-priced P&G products in advance of those price increases. So thank you, P&G, for doing that. But yes, to your point, I talked to P&G's COO and Vice Chairman John Mueller this morning. Big earnings and sales beat out of the company this morning. Really saw continued strength in fabric care and a lot of baby products. But the headline here is that, to your point, they are in fact raising prices by mid to high single-digit percentages across several categories starting in mid-September. But I did want to take a step back with Mueller here, guys, and also ask him what type of changes he's seeing in U.S. shoppers as people get vaccinated. Take a listen.
We're seeing a return to higher levels of consumption in categories that suffered as a result of the pandemic. For example, dry shaving. As people stayed home, they didn't shave as much. Certainly our away from home business that serves hotels and restaurants is starting to see a little bit more life. Some of the beauty businesses like deodorant, for example, the market had declined a little bit, and that's beginning to pick up.
So, Julie, great to see deodorant coming back. I don't know what people have been wearing the past year of the pandemic, maybe walking around their house all stank and smelling not good, but deodorant sales coming back for P&G.
Maybe deodorant is overrated, Brian Sozzi, especially when you're in a solo environment. We'll discuss that offline. But yeah, it is quite interesting what we're seeing from P&G in terms of that price increase. And certainly that's going to feed into the inflation debate, and also speaks to Myles's morning brief this morning about cost pressures, which we're going to talk about in the next hour as well. I want to take it to IBM also, because this company reported after the close yesterday, had its biggest revenue gain in 11 quarters. And it's a measure of just how lackluster the company's performance has been, that it's the biggest revenue gain in 11 quarters, and the sales were up about 1%. So that tells you how IBM has been doing. It did beat estimates, as you see there. And it also saw 3 of its 5 business segments seeing growth, including its cloud business. So basically, this seems to be an indication that CEO Arvind Krishna, who took over about a year ago now from Ginni Rometty, that his turnaround plan is starting to show some early signs of success. Krishna, by the way, also said he's confident that IBM is going to see revenue growth in the second quarter as well, and in the rest of the year. So perhaps an end here to the growth drought that IBM has been seeing. But really, we're going to have to see here, Brian, if they can keep this going indeed for the rest of the year.
Yeah, a bit of a snoozy quarter at IBM, Julie. To me, my biggest takeaway was on the earnings call, Christian noting that orders are improving, order rates are improving, which tells me that as economies are starting to reopen, mostly in the U.S., you're seeing a lot of corporate clients place really orders for those enterprise sales that have really got hit hard at the height of the pandemic. So that's good for an IBM, but also a lot of other key players that compete with an IBM.
Yeah, and it's really been,
Myles, fire away.
Yeah, Sozzi. I mean, the IBM story, one that I think we're all familiar with, and sort of how lackluster that's been for some time. Let's turn our attention to another company out with its quarter last night. That's United Airlines. Stock taking a little bit of a hit here in the pre-market, coming in with a steeper than expected loss for the latest quarter out of United. Obviously, the airlines have all been a big part of this reopening trade, and so we've seen a lot of enthusiasm in the name, just within the market. And so we've talked a little bit, about that story with United. And I think, from a stock perspective, the story has been, told to some extent. But an example here, I think, guys, when you come in, you miss on the top and the bottom line. posting a steeper than expected loss, even after the company had given some indications last month of where the business was headed. I think some questions here for investors. Again, stock has basically doubled over the last year, and so I think another name to keep on our radar. Brian Sozzi, another name that I know we're talking about what's happening over in the cigarette space this morning.
Yeah, Philip Morris out with a pretty good earnings report, Myles. But again, all eyes, I think, are on what the Wall Street Journal was reporting last night of U.S. regulators potentially looking to pull back on how much nicotine is in cigarettes. Also worth noting here, buried at the bottom of this Philip Morris earnings release, they said they are seeing an impact from the chip shortage. They sell these little electronic devices where you can obviously burn tobacco, almost like a Juul type of product. But they, too, are being impacted by the chip supply shortage because those devices use chips. So just a little interesting nugget worth there mentioning, so many companies being impacted by this chip shortage.
Well, and that's the only area of growth for the company, right? Philip Morris saw those IQOS or heated tobacco unit shipments overall up 30%. That's the only area that's rising, right? Cigarette shipments of all types for the company were in decline. So that's the place where it has staked its growth potential. That's been the hedge for not only Philip Morris, but the other cigarette companies as well. And so the bet has been, we talked to the Altria CEO earlier in the year, and, there is definitely an acknowledgement there that cigarettes are going away, that they're not good for you, that people shouldn't use them. And so the companies have been trying to find other sources of revenue, and heated tobacco and other types of tobacco consumption products are what they've been looking to, because it's almost as though they were expecting at some point this type of action on the part of regulators. We'll see if it actually happens. But you can't say that these companies weren't sort of maybe keeping their eye on this kind of thing.